Good evening, TheoTrade. This is Corey Rosenblum. You're watching the Theo Nightly video for the 24th of August here in 2021, and we got it. This time was not different. We got the pull from the low to the high, and as I highlighted from last Thursday's video, that was the play. This time, is it different? No, it wasn't. And we have to assume, we don't guarantee, there's no way to know, but in terms of probability, this is what we're referring to. It's just a simple pullback and the push up in the SPX, SP 500, or the futures or the spiders to new all-time highs. Was that in the cards? Yes. Was it guaranteed? No. And what's for the future? Let's track where we've come from. So as I showed in Thursday's video, in terms of the pullbacks, starting with 2021, that is, not going back further, we have this prevailing uptrend, and this is a series of higher highs and higher lows. The buy setups are to buy, or at least get long, purchase calls, after the market has pulled back or completed a rubber band snapback or a bull flag. Whatever term you want to use, it's a pullback on a 3 to 4 to 5 day basis. For me, it's the volume profile going from above the profile back to the lower end of the profile, and that hasn't happened a whole lot in 2021. Or on the daily chart, these pullbacks. So 1, 2, 3, 4, 5, and 6. And 7 was a question mark. Will it do the next phase? And the next phase, of course, is rallying up to new all-time highs. And so far, the market is, as of this video, batting 1,000. Or you can say batting 7 out of 7. Because that is what the probability favored. Not guaranteed, of course, but it rally up to new highs. Now, what's the next phase? What's the process? What's your trade going forward? It is to expect the rubber band snapback. On each of these times, we still have this uptrend, and this took a little longer in the April to May timeframe, but nevertheless, it did get a snapback. Not much, but a snapback nonetheless. So perhaps we drift a little bit higher. Perhaps we do go on to claim this 4,500 and the S&P. Maybe not, but either way, the next setup, the next play, given that this 1, 2, 3, 4, 5, 6, 7 is complete, is to play for a pullback. And the pullback is the name of the game. And that's, of course, in the S&P. The NASDAQ, which has been a little bit different on the chart, mainly has given a deeper pullback in twice. So it's not quite as bullish, or at least had deeper pullbacks in 2021. It is sneaking its way to new all-time highs. And in fact, that was an even more powerful rally than the S&P had. That's quite impulsive, and that took it from 14.8 all the way to about 15.4. And that, of course, is the NASDAQ terms. The Dow Mini Futures continued the uptrend, but splitting hairs again did not quite make that 35,500. But the one thing that's different, while we cannot be bullish, and everything is bullish, everything and its brother and sister and first and second cousins are bullish, that's not the case, because the Russell continues to trade in a sideways range, and that is not an uptrend. It is not bullish. It is neither. It's just a consolidation. And the next phase, of course, is a rally. But this is range resistance high and range support low. And those levels, as have been highlighted, is about 2,100 to 2,150 and about 2,300, 2,350. Don't think of this as an exact price. Markets are not exact sciences, but these are the levels to go long against, play for the midpoint target, or short against the highs. That at least is a statistical play. And think about this as a bell curve, where this is the median or the middle. This is the lower bound to go long or trade up away from. And this is the upper bound to trade short or away from. If you're interested, we can take a look, getting everything else off the chart. I like to use drawn trend lines to highlight these plays, but you can use standard deviation functions, Bollinger Bands, anything you like. My preference is usually to use the volume profile. And what that does, here's the volume profile. I'll just put it as a default, clicking it into the chart, apply. And at that point, you do see the levels. So think about this like a distribution. That's what I tried to draw a couple of seconds ago, but it's more like a pyramid. It's just a distribution where this is a level to short against, this is a level to buy. And that's not what we can do in the other markets because they are uptrending. They're bullish. So the profile does not come into play whatsoever. In fact, it would be quite deceiving to look at the profile on the S&P. And the reason is it is trending. The Russell is not trending. So we use different techniques for those. Outside of the equity market, crude oil is pulling back. We'll take that profile off the chart and get us back to our regularly scheduled price chart. Take that off, and remember, crude has peaked earlier in the year. The equity futures, S&P particularly, and NASDAQ just recently made new all-time highs, but crude has come down. And the other market we've been watching that correlates with the equity market, trades in the same direction as it, is TNX, which is the 10-year Treasury Index. It's like the bond market, ZBZN, but it's the yield. And the way to look at this is 118 actually is 1.8. And where I have it drawn is 10. It's not 10. It is 1%. 1%. So the Treasury yield, which had gone from about 0.6, peaked about 0.18. That was a big move in Treasury yields, has actually retraced and cooled off. And that is underscoring, or at least is going down, while the equity market makes new highs. That is something to continue watching in the broader perspective. And the same is true with crude oil. Going forward, we don't have a lot of earnings. We have Medtronics, just was today's session, and Salesforce.com. That'll take place, its earnings tomorrow. So not a lot to look at in the earnings front. And of course, the next is Oracle, a couple of weeks out. Anything on the market watch? Just looking at dividends, we could see that, or earnings, I should say. Looking at earnings, we do have a few key companies, but I like to look at it this way in the S&P 100. Not much to speak of. So we'll take the earnings off and just look at the Econoday. And you can do this on the Market Watch tab, the calendar, and you can look at weekly, daily, or perhaps monthly. What's up is the GDP report. And what this does is it puts key reports into your attention, ECB minutes, not quite like the Fed minutes last week, but industrial production. And you can see jobless claims and the other market moving events or potentially market moving events will take place here. Only one I'd be interested in too much would be Chair Jerome Powell speaks this Friday. We have Jackson Hole, of course, the Federal Reserve meeting, and they may have headlines out of that. So that is something we'll all be watching, but consumer sentiment and other plays or other reports in there. Now, going forward, again, setting up the trade, setting up the profile, setting up what we're thinking about, it is playing short term. And the videos here in TheoTrade just talk about the short term plays. And just like we were back above 4470, that will play to the downside. And that would favor the put side. That would favor the market trading lower in terms of what we'd expect for the next few movements or days at the end of this week and possibly pushing early into next week. But again, we play on a short-term horizon, and that just takes us on a rubber band snapback, and it could easily sneak higher. Could hit that 44 or 4,500. Not out of the question, but again, it's the same concept that the probability does favor a short-term snapback or pullback. And that leads us to play the put side of the short-term market. That being said, look for key stocks to pull back and retrace. And a few of the ones that I'll highlight toward the end of the video are stocks making new 52-week highs. Those would include Alphabet, Adobe, Cisco, and we just saw it today with earnings, Medtronics. A few others would include Intuit and not a whole lot else. But they are here. And there are stocks making 28 stocks making new 52-week highs. Some of them are making all-time highs. And we'll just pinpoint a couple. That would be Alphabet. I still call it Google, but it is technically Alphabet, which makes higher highs and higher lows. So it's actually a quite trending stock. The pullbacks are the flag or the buy trades, getting long premium into the pullback and playing up to the prior high. So that means there's no trade here. We would be looking for a rubber band snapback against 29 or 28.50 if you are to play Alphabet right now. Same is true for Adobe, but nonetheless, it is a strong stock getting stronger and has played. We'll put the weekly chart up on the right, which we can see some little bullish phases, and we'll go back to Google. Similar. So this is quite remarkable, and the same logic is playing in Microsoft, but it actually pulled back. Did not quite make an all-time high today, although it is coming down from 305. And we'll finish up with Cisco, which did just sneak to do all-time highs, I believe. At least on that perspective, we'll go back even further, and I believe so. Might not be the case back in 2000, but nonetheless, it's a new 52-week high, and that's all we're asking the computer to show us in terms of the scan, which stocks in the S&P 500 are making new 52-week highs, because strength leads to strength. Strong stocks lead to additional gains to the upside, and that does lead to risk-controlled trades, buying pullbacks, retracements, or flags, as has been the case in the S&P, NASDAQ, and other markets. Not the case in the Russell, though. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for August 24th, 2021.